Okay, guys, well done. Good morning, good afternoon, good evening from anywhere you're watching this video from. My name is RJ Kola FX, and I just want to introduce you to introduction to forex trading. Yeah, this is basically introduction to beginners concept in forex trading, right? So let's just get down to the business, right? So the first one is welcome to the world forex trading. Now, like I said, I'm just going to go through it. It's not really it's not that I'm going to give a broader explanation, but I'm just going to show you introduction. Of course, um if you may need this PDF, right, you can just get my number, and of course I can give it to you free of charge because it's free, right, for you to just watch, to read, sorry, and understand, right? So forex is the common term used to describe foreign exchange. It's also called crypto trading or just FX trading, and every now and then you may set you may see it referred to spot trading, right? So why would I want to trade forex? Good question. Most people have heard about trading stock, right? This is just trying to do a thorough introduction of forex trading, right? So we have advantages to trading forex, yeah, because the forex market is run continuously for 24 hours. Now, the first thing you need to understand about forex is one, forex is 24 hours. Two, it's a general and legalized business, meaning that it's run all over the world. And three, it has been a business that has been in existence for a very long time right now. So it's something that people continuously do, right? It's just the exchange of money, right? You're exchanging dollar, you're exchanging pounds, you're exchanging this, you're exchanging that, right? So it's just an exchange of everything, right? So let's just go down to, all right, so when is the market, forex market, open? Here I'll discuss the trading times, and as well as you see there is an example. There are some amplified times to trade forex. As stated earlier, it is the market that is open longer than it is closed. As most people would be aware, if you were trading stock, that you would trade those through an exchange, whether it was New York Stock Exchange or the Australian Stock Exchange. It's just trying to explain that forex is a direct trading. You don't need to exchange many things. You just go direct, do your things direct, and that is it, right? So we have various times that it opens. We have the first is to open in Asia times, right? Asia times followed by European session, and last session is US session, right? Those are the three general ones that usually it's focused on, although there are other times, but these are the ones that really it's focused on, right? So two is, what do you trade in forex? Now there are many currency pairs, so many to choose from. We have Euro USD, USD, JPY, GBP USD, USD chef, USD card, Australia dollar, pounds, and so on and so forth. There are so many that even you can decide to trade whatever you want to trade, right? So let's just go straight to three, because all these are just, right, like I said, if you want a PDF, the PDF on this one, I can give it to you. You can just join on my um free group and it will be dropped there, right? So chapter 3, how do we actually trade forex, right? So we have what we call one standard lot, one mini lot, one macro lot. Okay, now we have what we call your account balance, your nominated trading leverage, and how much you are willing to risk on a trade. Now, risking on a trade depends solely on you, meaning that you can just risk whatever amount you want to risk. Like, let's say for example, now someone has a trading volume of $100, right? You don't just trade the $100, you risk percentage. Sometimes you can risk $10. Now, risk is not fixed, it's depending on the individual who is trading the account, right? So it does not mean that you're supposed to risk one particular stuff or this like that. Now, before we continue, I want to tell you that in trading you have what we call trading view for analysis, and your MT5 for placing your trades. Now you have to look for a broker, right? Everyone has different brokers. You can sort for those ones your own self. We have the normal broker, which is different types exactly, but popular ones are like think brokers like Xness. Yeah, we have Xness, FPS, right? Those are popular brokers. I think HTF, right? HTF. I think so. I'll confirm later, but something like that. So those are the popular brokers which people usually use, right? So let's just go back. Yeah, we have what we call lot size here. You know, lot size determine how much you are ready to risk in the market, meaning that lot size can determine if the money is going to go faster or go slower, or you know, depending on what it is. They used to usually calculate this, right? So you just go online, you can search on how lot size is being calculated and the risks of having a bigger lot size, right? So normally, in weeks, right? Anytime you want to risk any percentage, no matter whether it's 10%, 20% of your account, even if it is 0.1% of your account, remember that whatever you are risking, you're supposed to get 2 times or 3 times the value. Now, if you are risking 10% of your account, you're supposed to be aiming for 20% income, right? It's not just you are risking an account of 1% and you're aiming for just 1%. It doesn't work like that. So a little more on risks. Yeah, just a couple of points that I have not spoken about. First one is risks and correlation, right? I have discussed risks per trade when I suggest no more than 2 to 3% per trade. Now this is just trying to tell you that when you are risking on an account, right, you can decide to risk any amount of your account, but normally some people usually risk 2 to 3%. Now we're talking of huge account, big accounts. Forex has to do with money. Let's be honest, if you don't have money in Forex, you are just like by the wayside, meaning that you may not make enough money from the market, and greed always sets in while trading. So just take note of those ones. Very, very important. Now we have what we call fundamental or technical analysis. Now, fundamental is also known as news, right? So we have news and fundamental. When it comes to trading, whether it be Forex, stocks, or do or daffodils, right? Most traders have a plan that they base their own particular trading method on. With Forex trading, the majority of small retail traders like you and I will probably use some sort of technical analysis, which is basically trading off the chart, right? Using weather indicators, patterns, or setups you choose, or you may even just wing it and trade without anything on the chart. Still a method for some, I guess. Then there are traders that will ignore the chart and trade off and are around major news release, which is basically the fundamental side of trading, right? So news event, we have what we call the trading calendar, where you can go and check out the major news, usually US news that affect USD pairs, right? Things like Euro USD, GBP USD, all those one that has USD attached to it, right? All those, there are news that basically affects them. Not that it does not affect other pairs, it does, but USD own is the most recurring ones ever made, right? So the next one we go is technical analysis. Now technical analysis is mostly what most people use, right? Is trading off the chart, right? Meaning that you can just go to your chart, draw trend line, draw box, draw support, resistance. That one is what we call technical analysis. So I don't think I need to explain it. But in executing trades, like I said, note that we execute trade in two platforms. You can either execute trade in MT4 or MT5, depending on you. Some also still use the brokers to execute their trade, but it's better to just use MT5 because it's more, just enter trade and stuff like that. Further informations on Forex specific. All right, so I already talked about risk management, right? Like I said, if you are risking any portion, be it 1%, 2%, 10%, anything you are risking, always aim for 2 as your lowest, right? Don't aim for 1:1 because it is not going to carry you anywhere at all, right? So in trading, we have types of orders whereby they specify types of orders given in your MT5, right? So we have what we call market order. This is when we jump straight in or out of a trade at a particular current price. Yeah, it means you press buy or you press sell. That is what you mean by market order. It's executed instantly. It doesn't wait for any shortcut, time view or something. It just executes the moment you press buy. That's what we call market order. And we have what we call buy stop or sell stop. This is where you enter the market going with trend. That is probably the easiest way to explain it. In case of a buy stop order, you place an order to buy above the current price, right? So buy stop, sell stop has to do with when um for buy stop, right? For buy stop, when the market is going up, you can put your buy stop above the current market price. That if price comes to that your buy stop, it continues. That is, you are believing the market is going to continue buying, so it's going to continue and push you continuously upwards, right? Sell stop is the opposite of what I just said. Sell below price so that you believe that if market continues going down, it's going to push your order and you'll be in profit to continue downwards. Buy limit and sell limit is just like almost practically not the same thing, right? Buy limit is where you believe that if price comes to this particular point or mark or wherever you marked, right, price is going to start buying. That means you always place it. For buy limit, you have to place it below price. Why for sell limit, you have to place it above the price, right? Because you believe that if price gets to that point where after price have sold a little, it will start buying. Then for sell limit, if price gets after it has bought a little, it will start selling, right? So those are the market orders, right? How many pips is enough? Now pips is a different ball game, right? You have to research on pips because pips has to do with so many calculations which I basically cannot start doing now, right? So out of everything we have talked about, right? I've talked about rather. The most important thing is your trading psychology. Now, what do you have to do with psychology? What is psychology talking about? You always hear psychology, psychology, psychology. What are they always really talking about? It has to do with your meta thinking, right? If you do not pay attention to your meta thinking, you can enter a lot of trouble. Meaning that in trading, if you have emotions attached to your trades, you will not allow your trades to run. Now, the good part of trading is that whatever you do, just allow your trades to run, either ATP or Excel. That is the best thing. That is why it's advisable that you don't cut your trades halfway because you already planned that this is what you're going to risk. So risk it. The moment you press that buy or sell, let the trade go. That's the thing. So I think this is all. Yeah, this is all. So in case you're interested in the PDF, don't hesitate, right? I can provide a PDF, right? Just join my free Telegram group and you'll see it free trading there, right? So basically that is it, right? So remember guys, my name is RJ Kola FX. I am a Forex trader trying to grow myself to being yeah where I want to be, right? So don't forget to subscribe, like, share, of course turn on the notification bell because this channel has a lot of things that we need to achieve, right? So I'll just basically just show you a lot of things and trust me, it's going to be wonderful. It's going to be wonderful. So don't go nowhere, right? Don't go nowhere.